Before we talk about how to file back taxes without records, let's go back to the origins. I want to give you an overview into how the whole thing works, why you should file back taxes in the first place. So filing back tax returns could help you do one or more of the following. So there are 4 options. You can claim a refund. So one practical reason to file a back tax return is to see if the IRS owes you a tax refund. While many have federal income taxes withheld from their paychecks, sometimes too much money is withheld, right? So in these cases, filing a tax return could result in a tax refund that puts money in your bank account, and that's what you want anyway. So that's the first option. Second option is you are stopping the late filing and payment penalties and interest. So filing a tax returns on time is important to avoid or minimize penalties, even if you cannot pay the balance you owe. If you don't file your return, you may have to pay an additional 5% of the unpaid tax you were required to report for each month your tax return is late, up to 5 months. This is really steep. So minimum penalty limits can also apply. So the IRS assesses another penalty for a failure to pay your taxes owed. If you do file on time, but you cannot pay what you owe in full by the due date, you will be charged an additional 0.5% of the amount of the tax not paid on time for each month or part of a month you are late. And the whole thing is that these fees will accrue until your balance is paid in full or the penalty reaches 25% of your tax, whichever comes first. So 25%, that's the threshold that Congress has actually established. And the IRS also charges interest on overdue taxes. Unlike penalties, interest does not stop accruing like the failure to file and failure to pay penalties. So that's option number 2. Option number 3, you can have tax returns for loan applications. Certain types of loans, such as mortgages and business loans, may require you to have documentation of your income as part of the approval process. So filing your tax returns before you apply for a loan helps the process go smoother. And the fourth reason why you might want to file a back tax return is that you want to pay Social Security taxes to qualify for benefits. So self-employed individuals have to pay Social Security and Medicare taxes through their individual income tax return. So by filing a return and paying the associated taxes, you report your income so that you may qualify for Social Security, retirement, and disability benefits and Medicare benefits when you need them. Very important. Now let's talk about how late can you file. Boss, I want to welcome you back to the show. In today's conversation, we are talking about how to file back taxes without records. So how late can you really file? Now, the IRS prefers that you file all back tax returns for years you have not yet filed. That said, the IRS usually only requires you to file the last 6 years of tax returns to be considered in good standing. The last 6 years, boss, very important. Even so, the IRS can go back more than 6 years in certain instances. Unfortunately, there is a limit on how far back you can file a tax return to claim tax refunds and credit. And the IRS only allows you to claim refunds and tax credits within 3 years of the tax return's original due date. This is why it's really important to file your back taxes as soon as possible. So by not filing within 3 years of the due date, you might end up missing out on a tax refund because you can no longer claim the lucrative tax credits or any excess withholding from your paycheck. So big decision time, boss. Let me ask you, big decision time. Do you currently have some back tax returns that you need to file? And how late can you go? Have you filed your tax returns for the last 3 years, the last 4 years, the last 5 years? What is your situation? Think about that. And if you still have time. If the last time you filed a tax return was 3 years ago, you still have time to file your return for 2 years ago and 1 year ago. Okay. And what you need to do here is you need to actually file. You need to gather your paperwork, just have all the important documents that you need, and file ASAP. The cool thing is that you have a lot of tax preparation software that allow you to file back tax returns without a problem. I'll speak about that later on. So here are some few pro tips that I want you to think about. Number 1, if your back taxes are complicated, please hire a pro. You can hire a CPA, a certified public accountant. You can hire an EA, an enrolled agent, or you can hire a tax attorney. That's number 1. Number 2, use tax software. Don't try to do things manually. It can be very complicated, especially if you are going back 3 years down the road, or you're going 6 years or 5 years or whatnot, it can be complicated. The calculations, I mean. So it's just a lot easier to entrust the whole calculation to software. They'll take care of. They'll do it for you. And the third thing is you can also contact the IRS to learn more. They have a customer service line that you can call and just ask more questions. You need to provide your social security number, but once you do that, you should be able to ask all the questions that you need. Let's talk about how to file tax returns for previous years. I want to quickly remind you of today's topic. We are speaking about how to file back taxes without records. You have no records and you are trying to file your back taxes. Okay, very important. Now, how do you file tax returns for previous years? Filing a tax return for a previous year is not as hard as you may think, but it does require a few steps. Number one, you want to gather information. So the first step here is gathering any information from 1 year. From the year you want to file a tax return for. So you want to pull together your W-2s, 1099s, and information for any deductions or credit you may qualify for. And you can look on the tax forms together. You want to look on the tax form together for the year of the tax return you are filing to make sure you use the right ones. And the thing here is that the cool thing is some W-2s and 1099s are available electronically. So if you cannot find the paperwork itself, go back online or talk to your service provider, talk to the bank or the brokerage where you got the 1099s from, for example, and ask them. You could talk to your employer to see if you can have an electronic copy of the W-2s that you really want. So number one, gather information. Number two, you want to request tax documents from the IRS. So finding documents from previous years may be challenging for some. Thankfully, the IRS has a form you can fill out to request any tax information they have on file for you for a given year. And so Form 4506T allows you to request a transcript of your tax return information, even if you have not filed a tax return. You can request information for the last 10 years. This is really good. For the last 10 tax years. And the IRS will send the information it has on record, including information found on forms such as W-2s, 1099s, and 1098s. It will not have information about deductions and credits you may qualify for, though. So you will need to do some work on your own. This is why I was just telling you, it's better also if you have a complicated tax process or tax return to hire an expert. And the third step you want to do here is you want to complete and file your tax return. Okay, so by the way, let me just quickly recap here. If you want to file tax returns for previous years, gather information, request tax documents from the IRS, complete and file your tax returns. So once you have all the forms you need, be sure to use the tax forms for the year you are filing for. For instance, you must use 2020 tax return forms to file a 2020 tax return. You can find these documents on the IRS website, and patience is really important when filling out a tax return by hand. And thankfully, you can also file tax returns from previous years using a tax preparation software tool. Step number 4, I want you to thoroughly examine your financial records. This is important. I mean, there's a strong correlation between your tax returns and your financial records, right? So you need to thoroughly examine your financial records for items that are not reported on tax transcripts. I mean, a 4506T is great. The IRS will give you all the information they have on file for you. But there could be some information that you have that the IRS doesn't have. Okay, so if you are self-employed, for example, it's plausible that you do not receive 1099 forms from every client. You still need to report your income that does not show up on a tax transcript and all of your business expenses. If you need to assemble this information, you need to start with these areas. Think about bank statements, very important. Think about digital payment processor records. We're speaking about PayPal, Venmo. Think about your credit and debit card statements. Those documents contain a treasure trove of information, financial information. Think about your email receipts, your paper receipts, your canceled checks, your deposit slips. So the thing is, even if you're not self-employed, you may have miscellaneous income that must be reported, such as proceeds from personal property sales or a winning lottery ticket. You can also be missing crucial deductions for health insurance and medical expenses, charitable donations, for example, and student loan interest payments. Make note of these items in a spreadsheet. It's always better to have a spreadsheet. And we always say, nowadays you even have apps that allow you to actually to put down all the kind of financial records, financial information, especially if you're doing something like filing a back tax return. It's important to track those items though. So you gotta have, I don't care if you actually write them on a piece of paper or in an Excel spreadsheet, but you need to have a system whereby you track them. Very important. If you are self-employed, it's a good idea to start, you wanna actually start separating bank, credit card, and payment processor accounts so that your business expenses are easier to differentiate from your personal expenses and more likely to be deductible as a result. So this is really important. We've said this on this show and also on other shows. You want, and this is not just for tax purposes in general, you want to segregate your business's affairs from your personal affairs. That way things are easier. You can track profitability. You can report income tax returns. You can report income taxes a lot more easily, and it's just better. Also, when it comes to preserving your legal asset, and let's say if you are involved in some kind of lawsuit, it's just a lot better to have a clear segregation of things between your assets, your personal assets, and your business assets. Now let's talk about what do you have to do. What do you do if you are missing tax records? By the way, folks, I want to quickly remind you of today's topic. We are speaking about how to file back taxes without records. Very important to remember. So what do you do? Now, you may have fallen behind on your back taxes from prior years before because of extenuating circumstances like health problems or fleeing domestic violence, for example, right? Other times, people simply forget to take care of their taxes in a timely manner when life gets in the way. So one of the most common reasons people neglect back taxes is because they anticipate owing a lot of money they cannot pay. So a lot of folks are kind of scared about the tax bill, the whatever amount they might see at the bottom of their calculation when they want to do back tax returns. The thing here is that you have to, sometimes it's just a lot better to do things and see if it really comes down to this amount, okay? And even if you cannot pay, you should still file your current and back taxes. No matter your reasons for falling behind on your taxes, it's always great to file your tax return on time if you can. This will make your life easier and ensure your taxes are assessed correctly. Plus, you will avoid associated failure to file penalties, okay? However, if you are missing records that you need to file your taxes on, this can complicate and delay the process of catching up on your tax returns. And it's important to really think about what you need to do. Now, there are a few things you need to do, and you got to really think about either contacting the IRS. You got to go back to the source of the document. For example, if you are missing, let's say, bank statements, you want to go back to the bank that issued the statement in the first place. If you are missing the W-2, you want to contact your employer. If you are missing 1099, as I said before, you want to contact the broker. You want to contact whatever institution is the primary, let's say, the primary sender of that paperwork. So here is a big decision time, boss. Big decision time. What are you missing right now? What tax records are you missing right now? And what is your plan to actually recover them? And so here is the approach you need to follow. You want to contact the source. You want to reevaluate the accuracy of the information. You want to incorporate the information on your back tax returns, and you want to calculate whatever tax liability or a tax refund that you will receive or pay to the IRS, receive from or pay to the IRS. Let's talk about contacting the IRS. This is important. If we're having a conversation about filing back taxes without records, it's important to request a tax transcript from the IRS if you cannot get copies from the payers. Okay, this is what I just talked about when I mentioned the sources. Today, many employers and financial institutions, among other types of payers, such as publishers and freelance gig platforms, will make your tax forms available to you electronically. So they'll do it online. And many will allow you to access these forms at any time, but sometimes the information is only available in a very short window. And a lot of companies, like banks, whatever, they might actually open up the window, let's say from January 15th, all the way to April 15th. In other words, the end of the official end of tax season. Okay. And so if the company has gone out of business, for example, it can prove difficult or impossible to get these records directly from the source. And so if your employer or clients will not release copies of your tax forms, you can see which forms were filed with the IRS by requesting a tax transcript. I just spoke about that. This is Form 4506T. Okay. If your employer or clients will not do this, then you have options. And the tax transcript details types of income that were reported to the IRS primarily. This is important. So, for example, things like wages and salaries on Form W-2, non-employment compensation, royalties, and other miscellaneous income or 1099 NEC and 1099 MIS, retirement plan distribution on 1099-R, interest on savings and other assets on 1099 INT interest. You need to think about dividend payments on 1099 DIV, and stock sales and other investment activity on 1099-B. So if you are missing records to correctly file your back taxes, the transcript you want is the wage and income transcript. You can request information as far back as the past 10 years, and tax transcripts provide you with verification of which forms were filed with the government and can help assure you that your entries on your back taxes are accurate. And people will often request them to properly respond to IRS notices, deal with identity theft, and prepare back taxes. So it's all about contacting the IRS for the right type of information and being sure that whatever information the agency is sending you, you can use that info to actually advance your case, whatever case you're fighting, okay? Whether it is an audit, a pending audit, or whether it is a request for additional information, or whether it is something else. It's really, really important to know why you're asking the IRS to send you Form 4560T. So what is really the game plan takeaway here? I have spoken about a lot of stuff, and I want you to really think about a few things before you actually leave today's conversation. So when you don't have financial records for past years, they have to be recreated from other available documents. So this process, known as forensic accounting, relies on IRS transcripts, financial statements, and other documents to substantiate information that you would usually get from your bookkeeping records, your receipts, your income statements, and other more detailed sources typically used to create an income tax return. So you can use those documents to help piece together your business's historical revenue and expenses, and also your personal expenses and revenue and income, if you will. If all of your transactions are processed through one or two bank accounts and credit cards, for example, you can go through those statements, categorize your expenses and income, and recreate the financial records you need to file back taxes in a fairly straightforward, though time-consuming manner, okay? And however, businesses that rely heavily on cash that mix personal and business expenses or have funds scattered throughout many different accounts may have a more difficult time, okay? And so depending on where your business lies on that spectrum, you can either handle the task of recreating your records yourself or hire a professional forensic accountant, okay? So the more complex your situation, the more likely it is that you will need professional assistance. So here are the sources to use when recreating past financial records. You can request tax transcripts from the IRS. You can gather bank and credit card statements. You can dig into past emails and paper records, or you can even hire a professional team. Okay. Again, it all depends on the complexity of the return you are trying to file. It's important also to remember that at the end of the day, it's all about cost versus opportunity, right? So you're not going to hire a professional team or just hire even one professional if the estimated value, the estimated benefits is way more than his or her salary. So those are things I want you to think about so that you make the right decision when it comes to filing back taxes without records. And so the most important thing here is Form 4506T. Everything starts there. 4506T, that's where you have all your info, and you can request that form, and you can even follow with the IRS, not a problem. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how to file back taxes without records. So we spoke about the reason why you should file back taxes in the first place, how late can you file, how to file tax returns for previous years, how to thoroughly determine your financial records, what to do if you are missing tax records, how to contact the IRS, and the game plan takeaway that you need to have right now. Thank you so much for your attention. I'll see you another time, but until then, remember, stay marvelous.